afternoon, everyone, and thank you for joining us today. My name is Brooke Butari, and I am the Executive Director of Alumni Relations for the American College of Financial Services. It is my pleasure to welcome you to today's Alumni Association webcast, the Kevin O'Connor Philanthropic Innovation Case Study. Today's webcast will introduce you to the late Kevin O'Connor, an American College alumnus and very generous man who left a legacy gift through a creative solution. While our presenters today will share perspectives from different viewpoints, we do want to disclose that this is only a creative solution for your toolbox, and this is not necessarily an endorsement for this specific company or method of charitable gift planning. I'm pleased to introduce our presenters, Steve Groark, Senior Vice President for Advancement and Alumni Relations at the American College, and the co-founders of the Insuring a Better World Fund, David Simon and Robert Stuchner.
Thank you.
Well, thank you, Brooke, and welcome everyone. This webcast is part reflection, part remembrance, and as Brooke said, part case study on how one American College alumni used life insurance to create a legacy at the college. We want to keep this webcast engaging, and we will have several polling questions throughout the session. Many of the attendees live on the webcast today work for nonprofit organizations. If you work for a nonprofit organization or a community foundation, our first question today is for you, and here it is. Does your organization have an individual or a group of individuals who are responsible for administering, evaluating, and making recommendations on life insurance policies owned by your organization? Let's take a few minutes and have our attendees respond to this poll.
Just want to add how crucial to have that is, Steve. I mean, you'll speak from your experience, but obviously in today's marketplace, a lapsed gift is something we never want to see.
Polls are in here, and it's evenly split at this point in time, which is a little bit of an outlier in the sense of traditional nonprofit organizations typically do not have individuals or groups that really have complete understanding and ownership of life insurance policies from the administrative side, the evaluation side. And so I'm going to have to assume that many of those who responded are college CAP alumni who themselves possess advanced knowledge of charitable gifts such as life insurance. So thank you for all of our CAP alumni on the call today. But I want to really reflect on a particular experience I had before coming to the American College, which really helped to shape my understanding of how life insurance gifts can be used for charitable purposes, and how without proper planning and administration and oversight, there could be some roadblocks along the way. And so it was through a process of a poorly structured and administered policy, again, at an institution that I worked at previously, that really led our institution down the path of redrafting our life insurance gift acceptance policy, redrafting our gift counting and recognition policies, and really formalizing a way to administer and evaluate the entire organization's life insurance gift portfolio. Here at the American College today, we are very fortunate to have a dedicated group of volunteer leaders who possess the experience and expertise to help the college evaluate its robust life insurance gift portfolio. I want to take a minute here to reflect on the individual we'll be talking about today, the late Kevin O'Connor. It was Kevin O'Connor, along with his colleagues, who recognized the need for additional resources and options related to the gifting and administration of life insurance for donors, for nonprofits, and for life insurance professionals. Again, I like to imagine a situation. I've spent a lot of my whole career in the nonprofit space, and there's always that situation where there's a small nonprofit and there's an individual sitting at their desk, and there's a folder that says life insurance on it. And they say, I'll get to that folder one of these days. And then that individual leaves the organization and the new person comes in and they say, what's this folder here? It says life insurance. I'll get to it one of these days. And they just never do. And so legacies are lapsed in those cases, and nonprofits are not receiving the philanthropic support that they would need to continue to fulfill their mission, especially as it relates to a legacy gift. And so Kevin and his colleagues really recognized the need. And so what you'll hear today in this case study are the considerations and the process that Kevin went through to gift his policy to the Insuring a Better World Fund, becoming the first donor to that organization. And ultimately, it was that policy that came to the American College to benefit the college today and in the future. Before I introduce our first guest, who is going to give some more details into his experiences with Kevin O'Connor, I want to recognize the members of the American College Legacy Society who are on our call today. The college is really honored to have over almost 2,000 members of the Legacy Society. Kevin O'Connor is one of those individuals. And as most of us know, I think in our gift planning space, plan giving space, nonprofits oftentimes will have legacy societies to recognize and honor individuals who make legacy gifts to the institutions through life insurance, charitable trusts, charitable bequests, and charitable beneficiary designation. So gratitude extended to all of our Legacy Society members on the call today. And the late Kevin O'Connor, CLU, was one of those members. He passed away in May of 2020, and he had a real deep involvement with the life insurance industry and he was a passionate lifelong learner. And so his gift that came to the American College will be used to help the college with our academic innovation, including our CLU initiative that we are working on today. Here to provide, again, some more details and background on who Kevin O'Connor was is his lifelong friend and a college alumnus himself, Mr. Robert Stuchner. So, Robert, welcome today.
Thank you. I really appreciate Brooks, Emily, and Steve, you giving me the opportunity to talk about my beloved friend, Kevin, and to talk about the Insuring a Better World Fund. Kevin was a friend of mine for about 30 years. He was one of the most influential, if not the most influential, people in my professional career. He convinced me to finish up my CLU. He got me very involved with the society board, the chapter board in New York City, and what we call in New York City, the Center for Financial Studies, are all organizations Kevin got me involved in. And I must say that in all of those years of knowing Kevin, I got the impression of a man with incredible passion for life insurance and what it does. He enjoyed the products. They were riddles that he would solve and figure out how the products work. He enjoyed communicating the benefits of the products to the agents and to their clients, and obviously knew that the work that he was doing was going to provide a benefit to somebody in the future, and was very much passionate about that. One of the things that you could say about Kevin is that he was always somebody who would give back. He was always willing to answer a question, willing to get involved in a problem. He and I were friendly competitors. He ran a BGA in northern New Jersey. I ran one in Manhattan. And even so, we would talk all of the time about problems and how to solve them. He and I were members together of the Yale Insurance Study Group. And at that group, I presented the idea of a alternative to life settlements for the benefit of charity, and that I was working with my friend David Simon on something we called the Insuring a Better World Fund, which was an option to the traditional life settlement for the benefit of charity. Kevin became extremely enthusiastic about Insuring a Better World Fund, and offered to essentially help us market the Ensuring a Better World Fund, and went down to the Heckerling meeting with us. And we took a booth together and introduced Ensuring a Better World Fund together. But I think most importantly is that Kevin decided, in terms of doing his own financial planning, that it was through the Ensuring a Better World Fund that he was going to be able to leave a big legacy to the insurance community and to the college through the Ensuring a Better World Fund. And essentially, if I may briefly tell the story, and that he had a number of insurance policies, and at least one of which he wasn't going to continue any longer. He didn't want to pay the premium. And the idea was, well, I could sell it, or I could now donate it to this new mousetrap that Robert Stuchner and David Simon have, called Ensuring a Better World Fund. And Kevin decided to become the first donor. It was a very interesting exercise, because we had to get his policy appraised for charitable donation. And it turned out economically to be very worthwhile for him, because the appraised value was quite substantial. And so he was entitled to a charitable income tax deduction for the donation. But I think what I'll do now is pass it on to David Simon, who will tell more about how the Ensuring a Better World Fund works and how it was contemplated.
Thank you, Robert. And I just want to say at the outset and reiterate something. We're not changing human behavior here. We're not offering this as the solution. This is, especially for the financial professionals, this is one of the arrows in the quiver. And I would say this is something that, on behalf of your clients, it's a must-have. The options to exit a policy are, few, but this is, I think, one of the, certainly it's the newest, and probably something that will provide a great deal of satisfaction to your client who otherwise may be looking at a lapsed life insurance policy. If you look at, there's approximately $20+ trillion of death benefit in force today. And through nothing but, again, long-time human behavior, recent statistics show approximately 88% of those policies will lapse without paying a death benefit, or about $18 trillion. We have here an annual lapse figure of about $300+ billion. That is probably off because it does not include workplace, but that's not our target market. Anyway, what we are more certain of is the very next ring, which is really our target market. And what Robert pointed out was this is an alternative to life settlements. And what I want to stress is we are not here to compete with life settlements. As every financial professional on this call knows, we are acting in the client's interest. If the client wishes to sell the policy, by all means, we should be facilitating selling that policy. Out of those people that are going to lapse annually, there's approximately $118 to $180 billion a year in our target market, that being seniors that are no longer going to pay the premium on their life insurance policy. The life settlement industry reaps somewhere around $3 billion a year. Now, not all of the 118 to 180 billion has value. Clearly, most of those policies lapse and do not have value. And therefore, the solution for the client, unfortunately, is to lapse the policy. But for those policies that do have value, they may find that the life settlement world doesn't offer them an alternative that they find acceptable. First of all, the life settlement world has a hurdle rate that they need to achieve for their investors. Secondly, they're paying for the policy up front. We are not. And thirdly, their death benefit is taxable. We are a 501c3 nonprofit charity. The death benefit comes in tax-free. And what that means is that many policies that otherwise have value will not price out for sale. And then we have the group that simply do not want to sell to a third party and have some hedge fund or corporation own the death benefit. And then we have our favorite group, which we call the affinity group. And the people on the webinar that work with charities, these are your favorite people. These are the people that love your charity and are trying to find ways to give as often and as much as they can. And what's wonderful about this is a unique way for someone to make a legacy-sized gift. Kevin wasn't able to make the six-figure gift by himself. However, he was able to donate a policy that he wasn't going to pay premiums on anymore to the Insuring a Better World Fund. And at this point, I want to say Insuring a Better World Fund is soup to nuts. You donate the policy to us, you select the ultimate beneficiary, and we have everything from premium payment to management expertise to keep that policy in force to maturity. There are a significant number of benefits to charities, and I'll go through them one at a time. I do want to say this is something that all charities should be doing too. The state of charities and life insurance today is not good. Steve mentioned a few things. I'll just highlight a couple more.
Before you launch into those, if you could just jump back, someone did have a question that they wanted to clarify. Is it that 88% of policies that lapse or 88% of face value that lapses? Could you just clarify that before we jump in for the audience?
It's really 88% of policies. That's the way it's talked about. So it may not be 18 trillion. It may be somewhere below that, or it may be more. It really is. The lapse rates given by Lisa and other organizations are based on policy count.
Great, thank you.
Sure, appreciate that, Brooke. I love hearing from her from beyond. It's a lot of fun. So for charities, currently, they have kind of a love-hate relationship with life insurance. The reason is there's been, I guess, programs, plans, schemes that have been introduced by some life insurance agents where they write new business and they name the charity. The T. Boone Pickens and Barry Kay come to mind. Both those failed miserably. Then there are experiences with what we call advance agreements, where a donor will pay the premium to the charity. The charity then in turn pays the premium to the life insurance company. And when the donor passes away, the charity receives the death benefit. Those have fallen out of favor with a number of charities because of the low interest rate environment meant that the planned premium did not come to fruition. And as the donor continued to live, the premium demand increased. And that caused several charities to kind of act as collection agencies to try and collect that premium. And you had a lot of unsatisfied donors who saw their legacies lapse. And as Steve highlighted, most charities have a drawer for their life insurance. And they take the annual statements and they put them in the drawer. And because of that, it's not until it approaches crisis mode, in other words, that new higher premium is due, that charities really start to look at it.
David, I think
one other big thing that is important is that a charity by itself is not going to accept the gifts that we're talking about. If the policy has cash value, a charity would accept it. Many times they cash it in for that cash value. At that time, they should be calling us at the same time because we may want the shell and be able to provide more benefit. Another reason they don't is they have no way of determining which policies have value. So they don't want to take operational cash and spend it on a life insurance policy. So what I'm going to do now is just run through just quickly the benefits to charities. And then I'm going to talk about something that is really neat about what we do, which is the fourth bullet down. And I'm going to turn it over to Robert to kind of talk about why that's so attractive to the charities we work for.
David, before you do that, Robert, were you going to say something? It looked like you were going to jump in and say something a couple minutes ago.
I was just going to point out that one major university on the West Coast won't even accept life insurance gifts with advance agreements any longer because they're afraid that the advance agreements won't be large enough to support the policy. So they've just gone ahead and said, we won't accept them at all anymore.
And that is not unique. I want to just a little background. Robert and I have been exhibitors at the National CGP conference for at least half a dozen years. And in interacting, there is that, feeling that life insurance is something that should be easy, but a lot of people find it very difficult to deal with. So why Insuring a Better World Fund? First of all, it's a new source of charitable gifts. And what that means is that you can now accept policies where you wouldn't otherwise accept it. Secondly, there is no cost to the charity at all. You don't pay any of the premium, you don't do any of the admin, you don't do any management, you don't even have to really add any new staff. We are the entire back office and we can white label for the charity if they don't even wish to have the Insuring a Better World Fund interact directly with their donor. This is fun because I've been at conferences. This is something new to talk to your donors about. And most importantly, it doesn't cost the donor any money. Imagine starting a conversation with, I'd like to ask you if you have a life insurance policy you no longer need, want, or can afford, because we may want that. And you don't have to pay the premium, and we're not going to pay the premium. You're going to see increased cash flow as a donor. You're going to see a tax deduction as a donor, and we're going to get this legacy-sized gift with just an introduction. And then the next bullet down talks about correcting the misalignment between the charity and the donor. As you might expect from life insurance, the death benefit comes at death. We do something very unique at the Insuring a Better World Fund. Robert, if you would, talk about the way we aggregate policies.
Sure. Actuarially speaking, you can talk about deterministic mortality or probabilistic mortality. Deterministic mortality is binary. You're either dead or alive. You can't die off in pieces. But when you have a pool, it can die off in pieces, and it can have a much greater predictability in terms of the cash flow from the pool. And so what we do at Insuring a Better World Fund is we're able to allow our charities to enjoy probabilistic mortality. So in other words, they do not need to wait for their donor to die. Rather, anybody who has died in the pool will cause a distribution to all of the charities. And the way that works is that each charity that has been named as a recipient or as a beneficiary of a gift to Insuring a Better World Fund gets a percentage ownership in what we will be creating, which is an actuarially credible pool of policies. And so they will get cash flow equal to their ownership of that pool. And the result will be a smoothing of the cash flows, so they don't have to wait for somebody to die, rather than when one of 200 people dies, they will get cash flow. But they disconnect the death of their donor from when they receive money, so that their donor could be alive for many, many years while they're still receiving money from their gift. So this probabilistic mortality and the way we distribute ownership in the pool is a unique to the Insuring a Better World Fund.
And that's very important, because even a policy on someone who is, critically ill or very sick, that person may respond. They may be the 1%. And that's why you never see a insurance company that only issues a policy on one life. Life insurance is the law of large numbers. And we're just taking that exact same law and applying it to charitable gifting. And because of that, it's a paradigm shift. We change that legacy gift into pro rata distributions over the course of the donor dies, you still maintain that pro rata distribution until the portfolio itself expires. So we hope to aggregate actuarially critical mass in portfolios every 2 years, close that portfolio out, and then start another one. And it's the bottom one also. So if you're a charity, and Steve has made mention of this, and you're given the assignment to look at your portfolio of policies, call us right away, or call another life insurance professional right away. There are people out there that do this, people that we have a great deal of confidence in, and people that Brian Klontz, Asher Group, people that understand the value of the policy and understand all of the alternatives. Because the last thing you want is a lapsed gift from a donor who's an affinity donor, who's really excited about the fact that they're able to give a gift so much.
Well, David, if I could just jump in here for a second, and the second to last and the last bullet point really, I think, really ring true for just broadly the nonprofit organizations with misalignment between charity and donor. And when you see that there's stress around a life insurance policy, where maybe it's no longer carrying itself, and the organization or perhaps the donor has to add more cash to it to keep it going, it interferes, with that, just the relationship between the individual or the couple and the organization that they want to support. So, as we've talked earlier with the first question, it's important to have that either internal resource or external resource. And you mentioned Brian Klontz, and I've had some experience in the past with Brian supporting an organization that I worked for to provide guidance and oversight there. And then the decreased lapsed legacy gifts. And that's something else is in I think you might have mentioned blended gifts, and a blended gift for those on the call who are from the advisor space and not really inside charitable giving or the nonprofit space. It's obviously blending a current gift of cash or appreciated securities with a legacy gift. And when you talk in terms of the current gift, the cash or securities, you know what that is, and you can kind of assign an impact value to that. And when you think about a future gift, life insurance, bequest, beneficiary designation, while there are certain kind of uncertainties to that, especially if it's an estate gift and the value of the gift kind of rises and falls relative to someone's retirement account, if it's a percentage of a beneficiary designation, that's kind of that's known. And with life insurance policies, as you mentioned before, with some policies not being structured really the right way from the start, or for market conditions, those policies become stressed, and ultimately, sadly, regrettably, you see some individuals who went into their dying days believing that they had a legacy gift lined up for a specific organization, only for that legacy to be lapsed and not to be fulfilled. And that's just no one wants to see that, right? So I just wanted
That's
to kind
true.
of shine a little bit of light on that. So
Good point, Steve. And I want to just highlight for a blended gift, and maybe it's because I'm in Chicago, but here it's really the quintessential. It's the perfect blended gift. You are accepting that legacy gift through Insuring a Better World Fund. But now you know that individual, that donor, no longer is paying premium for that life insurance. You've basically improved their cash flow. Well, if you've improved their cash flow by $10,000, then in Chicago, we would say, we're in for a taste. Tell me what that is, but we're going to get a piece of that. And if it's 5,000, we'll split it down the middle, or, maybe take it all. But it is a real perfect blended gift. And then we talk about the Insuring a Better World Fund pivot gifts. That's something, call me, I'll explain it. But it's generally that once you make that call, most people don't have a life insurance policy they're getting rid of. Very easy to pivot. And we can talk about that, when you contact us. At this point, I do want to take a quick poll myself, looking at the time. So if we can get that second polling question up, it's a two-parter. It depends if you're a life insurance professional. Life insurance professionals, how many of you currently work with charities? That's yes or no. And for the nonprofit and community foundation professionals, how many of you currently work with life insurance professionals? And I just want to say how important this is to establish this relationship. Again, if you went to our first slide, we're talking about a $20 trillion asset class, of which in number of policies and in death benefit, most of it goes to waste. So I'm happy to see that at least half of you have that relationship. The other half, we're happy to, help fill that void. But it's crucial that for a charity to make sure they have someone that understands the potential of this asset class.
It's a very difficult, complex asset class. It's not as simple as just you pay the premium and the policy's on its merry way. You have to monitor these things on a periodic basis. And that's an important part of what you can do for a charity, or what an Insuring a Better World Fund can do for a charity.
Thank you. Let's talk about the benefits for the life insurance professionals. First of all, you've got a client that has been paying premiums for quite some time for a life insurance policy. Now they no longer wish to pay the premiums. What are the alternatives? And a lot of times the alternatives are not good, and you have an unhappy client. On the other hand, almost everybody on this webinar has some philanthropic goal themselves. My father had Parkinson's disease for 18 years. He passed away in 2012, blessed memory, but certainly anything that we could do to help cure or make living with Parkinson's easier is something that is dear to me. But that's not the only. I've been on the board of a school for 20 plus years, been on the board of a religious institution, another disease. Everybody on this call has their own story. Everybody has a charity that they wish to associate themselves with, that they wish they could fund better. Look at the size of the asset class that's available to help do that. The second one, we have job satisfaction. There's study after study that shows when you work with a cause that you feel strongly about, that gets deep into your passion, you're going to feel better about the job you're doing. Besides the fact that working with charities builds prestige, influence, and your business. And I say in your business because if you start to work with a charity, there's the opportunity to write the other members of the charity, but there's also the opportunity to do exactly what we're saying. Review policies, see what's in the best interest of the donor and the charity. And then, of course, we never forget income. Just like a life settlement, the renewals keep coming. Unlike a life settlement, if you convert a term policy, we don't step on the commissions at all. It's all you. And then obviously additional referrals and new business are a strong part of growing anybody's life insurance business, but mostly here because it's feel good and all good stories. So the call, the initial call, all that is much simpler when you're working with a charity and calling on behalf of that charity.
David, we love those feel-good stories. But before you continue, we did have two quick questions that
Sure.
came in. Someone had asked if you take all policies regardless of value.
No. So our hurdle rate is significantly lower, so our funnel is much bigger, but we will do things that are analogous to a life settlement. We will age, premium, and there's a health questionnaire. And only if we determine that that policy has value, and that really is the simple calculation of the present value of the death benefit minus the present value of the premium at a discount rate. And we require at least 3% of face. So we're not requiring as much as a life settlement, but we want to make sure that when someone donates, the charity can expect to receive a gift.
Wonderful.
So I thank you for that question. It's a very good question.
Sure. And the next one builds off of that a bit. Looking at cash flow, someone was wondering if you could get into the weeds a bit. He was assuming that if some policies are in need of a premium, a portion of current death proceeds could be utilized to fund those.
So in the life settlement market, there are people and there are firms that will buy a portion of the policy and then fund the premium for the whole, leaving a retained death benefit to the individual. We don't operate that way. Instead, what happens is we'll take a policy with value. We pay all the premiums. The donor is out of the equation. The charity is out of the equation, except the charity is going to start receiving pro rata distributions from that vintage, from that portfolio, once the premium payer is repaid. So again, there is the opportunity that if a policy does not price at this point, that if that individual feels strongly about that charity, they can dump in a sum of money to the Insuring a Better World Fund to pay for a couple of premiums to make that policy work. But it is not anticipated that we would sell the death benefit to have premiums paid. We have a premium payer, and I guess this is a good point to this program to point out that we are in the process of securing a $20 million premium payment facility. We're very excited about that. That is our largest commitment to date. And that should be coming on this week. So it's a perfect opportunity for people to, look to donate their policies to the Insuring a Better World Fund.
Wonderful. I'll save the other question I have here for the end, but let you guys continue on.
I do want to just, you made note anecdotally. We have, through the Insuring a Better World Fund, started a legal aid clinic in Oakland through the Archdiocese of the Catholic Archdiocese in Oakland. And that has made a tremendous difference in landlord-tenant, especially during the COVID. And during COVID, there are plenty of charities that are using operational cash and having to dip into their endowment. We are a great solution for that. And I will say on a personal note, it's not just the Parkinson's, but I really have a very strong relationship with life insurance. I don't know that anyone can love life insurance, but I'm probably the closest there is. I married my dad's life insurance agent. And my mom lives on the policy my wife sold, wasn't my wife at the time, my wife sold my dad back in 1978 through a death benefit VIVA. So I feel very strongly that, life insurance should be used, if at all possible, for the reason it was sold. We're not changing human behavior. We're just looking for those policies that are going to lapse anyway. And
well, David and Robert, if I could just jump in for a second
Sure.
and bring Kevin's name back up again. So How long was that process for him to go from contemplation, consideration, and then ultimately working with the Insuring a Better World Fund to transfer his policy that ultimately, a portion of it, a significant portion, benefited the American College? So walk us through that timeline.
Sure. Kevin's was a little quick, and I'm going to, talk about him, and then I'll use someone that's more typical. Kevin was in the process of shopping his policies. So he had all of his attending physician statements. He had all of his life expectancy reports already done. So by the time we talked to him, it was neatly packaged, and we were able to get a thumbs up on the donation rather quick. And from that point, the donation of a life insurance policy has been going on for decades. It's pretty simple. You do a change of owner, you do a change of beneficiary, we have a grant form, then you have a death certificate notification and a continuing HIPAA, and that was it. So Kevin's probably only took about, I would say, the documentation on our end was probably a week to 10 days, and then the time it takes to get back the acknowledgement from the life insurance carrier about the change of owner and change of beneficiary. Typically, when we find somebody, it's a little different. What happens is they will call and say, can I donate my policy? And our first questions are really, the demographic, age, sex, how long has the policy been enforced, what's the death benefit, because we do have a minimum death benefit. Right now, it's $250,000. And then we'll put them through an online questionnaire that's been developed by our funder. And if that passes, we then have them put a letter of authorization so we can get illustrations from the life insurance company. And if all that prices out, which again, we'll do in our target market, probably about 40% of the time, we're able to then get the acceptance for donation, and the forms just take as long as it would take the carrier to acknowledge the change of owner, change of beneficiary.
No, I appreciate that. And, as I mentioned earlier on the call, Kevin is a member of the American College Legacy Society. He was the first owner of the Insuring a Better World Fund. His gift was realized at the American College to really help us continue to innovate and advance our academic excellence. And so it was important for the college, as we celebrate Kevin, the legacy that he left at the American College, and certainly within the insurance world, to tell this part of the story of his relationship with the Insuring a Better World Fund. So we're really grateful for his leadership and generosity, which is really fueling the growth of the American College today. So I want to make sure that I just restate that before the end of the call here. So
I appreciate that. And I think focusing on Kevin is important. I mean, and I really think that he really provided a legacy for all of the financial service professionals to follow. Not only was he a lifelong learner, he put his clients first 100% of the time. He was never commission driven. If you look at the OWR website, it just wasn't what motivated him. Obviously, earning a living was paramount, as it is for everyone, but he really tried to find solutions based on the individual. And that's why he loved this so much. It really is an alternative. It is one of many, but it is an alternative that your clients would really embrace. And I think so will the charities. It gives them a tremendous amount of satisfaction to know that they've been able to support the charity that they feel so passionate about. I know we're going to be a little short on time. I just want to take a quick note about why now, why it's so important that everybody get on board now. First of all, as Robert pointed out, we're all about aggregating. We're all about getting to actuarial credibility. So without you, we have no chance of success. It's only with your participation that we will be successful. But as I pointed out, the lapses are occurring constantly. They're happening now on this call. People have lapsed policies. So opportunity is slipping by each and every day we don't take advantage of. 10,000 people a day turn 65. I've heard, between 6 and 8,000, 75. It means there are people entering our target market for the next decade and a half that have oodles of life insurance that may go unused or wasted. So getting out there, finding those opportunities, they're out there and they're out there now. And I can say to the fellow life insurance agents and financial professionals, this is a wonderful opportunity for our profession to really make a difference in this country. Let ALU or Fonseca go to Congress and say, look at the charities we're supporting. Look at the good that we've done as an industry. Because as Robert says, it's really nice to do well by doing good.
Well said, well said. Let's go back to Brooke. Brooke's been really minding the chat for questions. Brooke, before we end the session today, are there any final questions that you have? And if not, folks, we are going to be sending a follow-up email, and we're going to feature Kevin O'Connor's story in our upcoming Alumni and Friends newsletter. So there'll be information about Kevin O'Connor and information related to the Insuring a Better World Fund in that write-up as well. So Brooke, anything left from you?
Sure. We have a few questions that have come in. And so I would invite anyone that has some questions to go ahead and put them in the Q&A. The one question that came in was, who else does the charitable donation the same way as the Insuring a Better World Fund? Is there anyone else who does it this way?
Not exactly the way we do it, no. There is people that, mostly the charities, who will accept life insurance policies, but there is no one out there that does the soup to nuts that Insuring a Better World Fund, and there is certainly no one out there that really has that paradigm shift where we change the misalignment between donor and charity, so you no longer have to wait for your donor to die.
Okay. Another question that came in, this one's a little detailed here, so I'm going to read it to you word for word here, is what method is used to arrive at the appraised value? Is it a certified appraiser required to sign the corresponding IRS forms? Every policy and insured will have different cost and mortality profiles. Does the donor have the opportunity to see the existing Insuring a Better World Fund policies and corresponding analysis related to cost and anticipated maturity dates on the policies before they donate their policies?
Well, that's really two questions.
Yeah, it was a mouthful there. So I don't know if Robert, if you want to take it a little bit, and David, or how you guys.
Right. I think I'll have Robert talk about the first part, and then I'll go to question 2.
So yes, you do need a third-party appraisal. And the methodology in the third-party appraisal is sort of what David had said before. You're looking at discounted cash flows, discounted death benefit versus discounted premium. But when you're doing an appraisal, you use probabilistic mortality, which is very different than what an individual would do. So it's using probabilistic mortality, and it's usually using a discount rate that's associated with the creditworthiness of the insurance carrier.
Yep. And as to the second part, we're certainly happy to be able to show that individual donor how his policy is perceived by the Insuring a Better World Fund. We do not disseminate any information about other policies that have been donated.
Okay. Another question that came in is, where does the Insuring a Better World get its funds from to pay premiums?
We have a third party, this is actually a good lead in. We have a third party funder that provides the premium. We have a third party servicer that services on behalf of the funder and the charity. And we have a third party custodian and premium paying agent and claims receiving agent. So this is all out there, and you don't have to rely on Insuring a Better World Fund, nor does the premium payer. We have third parties that monitor every step of the way once a policy is accepted for donation.
Sure, sure. I think that kind of builds this other question that just came in. How does the fund support itself? What percentage of the donation secured goes to satisfy the premiums due versus paying expenses of the fund?
Well, obviously the overwhelming majority goes to the paying of premium. And that is individual policy dependent. So obviously a policy donated by someone who has a 5-year life expectancy is going to cost a lot less than the same policy for a 20-year life expectancy or a 15-year life expectancy. But in general, I would say because we are trying to accept as many policies as possible, so there will be some that have, really the bare minimum value, and then there will be the affinity donors that have a great deal of value. But the way our expectations is on $1 million policy, somewhere between 350 and 450,000 ultimately would be realized by the charity. And that's just the average. There will be below and above.
Okay. Well, I think that is it for the questions that we have for today. And we're just about wrapping up here at the end of the hour. So David, Robert.
Yeah, I just want to thank, first of all, the American College. They do a tremendous job of educating a group of individuals that have a tremendous responsibility. When you are planning, I've seen death benefits delivered to a family of 4 kids, literally on the kitchen floor, and they're living on that. So I can't thank the American College enough just for the job they normally do in making sure that, we're all educated as best possible. And then, of course, for hosting this and anything that can instill that type of passion in Kevin O'Connor for an organization where he would go out of his way to name it is really something special. So Steve and Brooke and Emily, I can't thank you enough for the job you do on your day-to-day, much less hosting us and giving us the opportunity to present our mousetrap to everyone here.
I appreciate that, David and Robert, and grateful for Kevin O'Connor's generosity.
Thank you all for sharing, but most of all for honoring Kevin's legacy and really talking through this case study that, in a lot of ways, Kevin could have chosen to do a number of different things. And this was just one avenue that was a possibility. So we certainly hope that this is a useful tool for our attendees. And on behalf of the American College Alumni Association, thank you to all of our attendees for being here today and listening to our presentation. The college has a number of webcasts planned for the future that you can sign up for at theamericancollege.edu/events. Super simple, including our next upcoming Alumni Association webcast, which will be featuring a panel of next gen presenters on May 6th. So we're really excited, looking forward to that next webcast. We're so glad you could join us. Please feel free to reach out to any of our presenters via LinkedIn, their websites. So thank you all again, and we hope you all have a wonderful afternoon.
Thank you.
Thank you.